Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM, linking you to the global markets to access various financial assets. Now, today being on the 20th of February 2024, we had a number of high impact news coming from various jurisdictions in the world, and that was on Wednesday, the 19th of February. We had the Reserve Bank of New Zealand cutting their rates by 0.5 basis point, 0.25 basis point, which was meant to resuscitate their economy by injecting more money in the economy by giving loans with cheap interest rates. Now, we know the works of the central banks have always been to monitor inflation and ensure favorable favorable employment, and we see the New Zealand central bank cutting rates to keep up with those two major roles. We also had a CPI coming out from from England, the United Kingdom, where we see it came out at 0.1% with the anticipated at negative 0.3% and the previous at 0.3%. So we see somewhat improvement from the anticipated, and year on year we see actual printing at 3%, with the consensus being 2.8% and the previous being 2.5%. So we see an increase in consumer spending in United Kingdom, and later on during New York session we had the Federal Open Market Committee follow-up report, which printed no data because it was a follow-up from the 29th of January Federal Open Market Committee interest rate decision that is in the United States. The FOMC is the central bank of the United States. Now, moving on to today, Tuesday, we have had the unemployment rate in Australia coming out steady as expected at 4.1%. We also see employment change coming out at 44,000 from the anticipated 20,000, with the previous being at 60,000 revised. So we see an increase from what was anticipated, which is good for the Australian dollar. And as we move into tomorrow to observe the Reserve Bank of Australia interest rate decision also, as we monitor other high impact news. In geopolitical events, still on fundamental analysis, we somewhat observe a retaliation of the Canadian government to Trump's tariff, where we have the Minister of Trade, Mary NG, saying that the Trump's tariff make no sense. This is to be interpreted as a retaliation by the Canadian government to attempt to renegotiate with the United States over the 25% tariffs, which are tax imposition on imports. Before we proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access it on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button and share so that you're not left out in future content that we produce from time to time. And it is our commitment that we shall keep posting new content to bring you up to speed with prevailing economic trends in our attempt to fill educational gaps. Moving on to the charts. Now, beginning with gold, yesterday we see gold at touching the all-time high again, And we speak at the time, recording time of this video, that is at 10 a.m. East, 10:11 a.m. East African time. We see gold is trending at its all-time high ever in history, and as known to man at 2948.73. We anticipate this trend to continue, and I remember we called it out from this key level here at 2786.19, and we summarized that the bullish trend in gold is caused by, one, of course, fundamental analysis coming from the United States, but majorly geopolitical events, where we have geopolitical events or global situations which are causing fear and tension, making the demand of gold to increase in its value. And this is because investors diversify the investment portfolio from stocks, from bonds to gold, which is seen as a safe haven in times of crisis and uncertainties. We are likely to see this trend. However, it is important to wait for pullbacks for us to continue riding the overall trend, which is a bullish trend. Switching off to stocks, US 100 or Nasdaq, we see Nasdaq broke the all-time high. We saw this yesterday. Now we are seeing a retest of this key level at 22,152.76 or thereabout, for price to continue trending in the upside. We see quite a unique marriage or amalgamation between price, technical analysis, and fundamental analysis. And this is what generally we like to see as traders. And this does not matter the type of trader you are. May you be a scalper, which at times you're forced to trade counter trend. May you be a day trader, swing trader, or position trader therein. German 40, yesterday the DAX, or the German 40, retraced, gave us a retracement, and which is likely to proceed in the upside to take out the all-time high, or come and test out this key level here at 22.165.77. The overall trend, although is in a bullish trend, and we would say it's a risk-on approach, to mean lower risk when looking for buying or long position in this particular asset class. AUD USD is still attempting to break out on the daily at the key level at 0.63723. Would anticipate a breakout of this level to the upside due to the adjustment by the Reserve Central Bank of Australia to monetary policy as an attempt to hasten the economic growth of the Australian state, but would keep an eye on the dominance of the United States dollar, because they are paired together, so that we are in line and confluence with the same. New Zealand dollar, NZD USD, nice. So we see currently the New Zealand dollar, United States dollar, after the interest rate cuts, we are likely to see the NZD USD attempting to change character from the long-term bearish trend to attempting to change into a retracement, or from the downtrend to an uptrend. We would want to see the attempt of NZD USD as an asset under the asset class of currencies to attempt to reach out the 0.580 or thereabout price, for price to keep printing on the uptrend. So we would say long position at this stage could not be considered as risk off, risk on, apologies, to trades, but risk off due to the economic data which is being printed from the New Zealand state that we have just observed. Very nice. Now, as a disclaimer, this is meant purely for educational purposes. It's not for financial advice. It is important to do your due diligence and, most importantly, observe risk management so that you approach the market with a much more required risk approach, and for you to be able to see future possible profits. And if this is your first time to have a conversation about the financial markets, you would attempt to register for an account and fill in your details, or get in touch with your mentor who has led you to this chat box for them to help you register for an HFM account. Our experts will get in touch with you, and also our business partners who are going to help you establish an account, which is completely for free. And with that said, until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless and take care.